So interest rates are finally starting to drop. If you've been waiting for this moment, you're not alone. A lot of buyers have been sitting on the sidelines hoping for lower rates. And guess what? They might finally be here. But before you rush out and start shopping, I want to break down what this really means for you, what you should be doing right now, and how to get yourself in the best position to win when the right house comes on the market. Stick with me because this could be the window that changes your buying power. Let's start with the big question: why are mortgage rates actually dropping right now? A lot of people think it's because the Fed just decided to lower rates. But the truth is, it's a little more complicated than just that. And understanding it will help you make smarter moves when you're planning to buy. So here's the simple version. Mortgage rates are connected to what happens in the overall economy, not just what the Federal Reserve does. Things like inflation, job growth, and investor confidence all play a big role. When inflation starts to come down, meaning the cost of goods and services isn't rising as fast, investors start to feel more confident that the Fed won't have to keep raising rates to slow the economy down. And when the Fed signals they're planning to pause or even lower the federal funds rate, the mortgage market often reacts early. That's because mortgage rates are based on long-term bonds, like the 10-year Treasury yield, and those are driven by what investors think will happen next. So investors believe inflation will keep cooling and the economy might slow a bit. They start moving their money into safer investments, like bonds, which drives bond yield down, and when the bond yield drops, mortgage rates drop too. That's exactly what's happening right now. We've seen a shift where the market is saying, okay, inflation is cooling and the Fed might be done raising rates. And maybe we'll even see more cuts over the next several years. Mortgage rates have already started to slide ahead of the Fed's actual decisions. Now, here's why this matters to you as a buyer. Even a small drop in interest rates can make a huge difference in your monthly payment. Let's use a real example. Say you're buying a home for $700,000 with 10% down. At 7.25% interest rate, your monthly payment, including taxes and insurance, could be around $5,300 a month. If rates drop to 6.5%, that same home might cost you around $4,900 a month. That's about $400 less every month, or roughly $5,000 a year back in your pocket. And it's not just the monthly savings, it's your total buying power. That same drop in rates might mean you can afford a home that's $40,000 to $50,000 more expensive without increasing your payment. So when rates move down, it doesn't just make your payment smaller, it opens the door to homes that you couldn't afford before. That's why rate drops matter. But here's the thing, that's only half the story, because while lower rates help buyers, they can also change the entire housing market dramatically. And that's what we'll talk about next. If you have any questions about taking advantage of the rate drop, call my team at 209-640-1710 and we'd be happy to talk to you about your possibilities. So now that we know why rates are dropping, let's talk about what it really means for you, the home buyer. When rates fall, everyone gets excited. The headlines start saying things like, mortgage rates hit their lowest point in months. And instantly, people who are sitting on the sidelines start thinking, maybe it's finally my time to buy. That surge in interest can totally change the housing market almost overnight. Here's what I mean. When rates were higher, say in the 7s, a lot of buyers pressed pause, homes sat on the market a little longer, and sellers were offering price cuts or credits to attract offers. But when rates drop, something happens. Those same buyers who are waiting suddenly reappear all at once. That extra demand can cause homes to start selling faster and even push prices higher. So yes, lower rates make your payment more affordable, but they can also make the houses themselves more expensive because more people are competing for them. Here's a quick example. Let's say 6 months ago, a house listed at $700,000 sat on the market for 30 days and sold for $680,000 after a price cut. Now that rates have dropped, that same home might get multiple offers and sell for $715,000 or more. That's how quickly the market can shift. Lower rates increase buyer confidence, and when confidence goes up, so do prices. But here's the good news. You can absolutely still win if you plan ahead. The buyers who prepare before the crowd rushes in have the advantage. That means getting pre-approved, understanding your numbers, and having your documents ready to go so that when you find the right home, you can act fast. Think of it like this. When rates drop, it's like concert tickets going on sale. Everyone wants wants them at the same time. But the people who already have their accounts set up, their credit cards entered, and their alerts turned on, they're the ones who actually get the tickets. So as rates continue to fall, your best move is to be ready before everyone else is. Because the moment the market gets busy again, you'll already be in a position to grab the home you want at the best possible terms. So now you're probably wondering, okay, rates are dropping and the market's heating up again. What should I actually do right now? I'm glad you asked, because this is where the smart buyers separate themselves from the crowd. Here's your step-by-step plan to stay ahead of the curve. Step number 1, get pre-approved right now. I know I say this all the time, but getting pre-approved is the single most important thing you can do. When you get pre-approved, your lender, like me, reviews your income, credit, debt, and assets to see exactly how much home you can actually afford. This helps you in 3 ways. 1, it gives you clarity, no guessing, no what ifs. You'll know your exact monthly payment, down payment, and closing costs before you start shopping. It gives you confidence. You'll walk into open houses already knowing what fits your budget instead of falling in love with something that's way out of reach. It gives you leverage. Sellers take your offer seriously when you already have a pre-approval letter. It shows you're ready, qualified, and not just browsing. Here's a pro tip. Pre-approval letters are good for about 90 days, and we can update them easily if rates change. So even if you're not ready to buy tomorrow, it's smart to start this process today so you're ready when the right home pops up. Step 2, get your numbers dialed in. Once you're pre-approved, we'll walk you through your specific numbers, your price range, payment comfort zone, and total cash needed to close. That includes things like property taxes, insurance, and any mortgage insurance if you're putting less than 20% down. I always tell my clients the goal isn't to qualify for the most house, it's to qualify for the right house, something that fits your budget, your lifestyle, and your future goals. And remember, there are always loan options that can help you buy sooner. Programs with 3% or 5% down, or even grants and assistance programs that can help cover part of your down payment or closing costs. We'll find the one that makes the most sense for you. Step number 3, build your team. Buying a home isn't something you have to do alone. Having a great real estate agent and a strong lender makes the process smoother and less stressful. Your agent helps you find the right home and negotiate the best deal. Your lender, that's me, helps you understand your numbers and guides you through the financing step by step. Together, we make sure you don't overpay, overlook something important, or lose out on a home because of timing or paperwork. And if you don't already have a great local agent, I can connect you with one who's experienced in your area. Step number 4, watch the market, but don't wait too long. Here's what I mean. Keep an eye on listings, interest rates, and neighborhood trends, but don't wait for the market to be perfect. There's no perfect time. There's only your time. If you're financially ready and you find a home that fits your life, that's your green light. Remember, you can't refinance rent. You can always refinance your mortgage later, but you can't go back in time and buy a home you missed. So to recap this section, get pre-approved early, know your numbers, build your team, stay alert and ready to act. If you do these 4 things right now while everyone else is still waiting and watching, you'll be in the perfect position to buy before the market gets crowded again. All right, now that we've talked about what's happening with rates and what buyers should do, let's go over a few smart strategies to actually win in this market, even while rates are still a little higher than we'd like. So here are some of my favorite strategies that my clients are using right now. Strategy number 1, use seller credits to buy down your rate. Here's a secret a lot of buyers don't know. When the market slows down, sellers get motivated, and motivated sellers are more often willing to offer credits, money you can use to help with closing costs or to lower your interest rate. It's called a rate buy down, and it can make a huge difference in your payment. Here's another strategy. Consider a 2-1 buy down. It's a temporary rate reduction, meaning for the first year, your rate is 2% lower, and for the second year, it's 1% lower than your full rate. After that, it goes back to the standard rate. So let's say your normal rate is 6.75. In the first year, you'd pay as if your rate were 4.75, and in the next year, you'd pay as if it were 5.75%. That gives you some breathing room while you settle into your new home or wait for rates to drop, and then you can refinance later into a permanent lower rate if the market does improve. Strategy number 3, expand your search. If you've been house hunting in an expensive part of California, like the Bay Area, Orange County, or San Diego, and the prices still feel out of reach, consider widening your search radius. There are still amazing communities just outside those high demand zones with great schools, parks, and amenities, and often for hundreds of thousands of dollars less. I've seen families buy just 20 to 30 minutes from their original target area and save $150,000 to $200,000 without giving up quality of life. Strategy number 4, plan to refinance later. One of the smartest strategies right now is what many people call marry the house, date the rate. That means if you find a house that fits your life and your budget, go for it. Even if the rate isn't perfect yet, you can always refinance later when rates improve. I've helped so many homeowners do this over the years. Buy when everyone else is nervous, then refinance later when rates drop, and they came out way ahead. The key is to buy the right home now, build equity, then lower your rate when the opportunity comes. That's how smart buyers win. Not by trying to time the market perfectly, but by making moves when others hesitate. All right, let's wrap things up with a quick recap, because this part is where everything comes together. Here's what we've talked about today. Mortgage rates are starting to drop because inflation is cooling and the Fed is signaling future cuts. Lower rates can save you hundreds of dollars a month, but they also bring more buyers back into the market, which means more competition. The smart move, get pre-approved now so you're ready before the next wave of buyers jumping back in. There are creative strategies you can use, like seller credits, rate buydowns, refinancing later, that can help make buying a home today a smart financial move, not a risky one. So the real question isn't, should I wait for rates to drop more? It's, am I ready to make a move before everyone else does? Because the truth is, the buyers who act early usually get the best homes at the best deals. And listen, I get it. This market can feel overwhelming. That's why my team and I are here to help you cut through the confusion and get a clear plan for your next move. Here's what I want you to do. Call or text my team at 209-640-1710 to schedule a free 15-minute mortgage strategy session. We'll go over your exact numbers, review what loan programs make the most sense for you, and build a game plan for buying smart, whether that's this month or in 6 months from now. No pressure, no sales pitch, just clarity, confidence, and a path forward. And if this video helped you understand the market a little bit better, do me a quick favor. Tap that like button, leave a comment below with your biggest questions about interest rates or home buying. Hit that subscribe button so you don't miss future updates about California's real estate market. Thanks so much for watching, and I'll see you in the next video.